Closing the door. Well, good afternoon, everybody. It's 4 o'clock on a Friday, and I've got the best session of the 2 days. A, to keep you here and occupied, but also to get between you and the drinks that start in about an hour or so. So my name's Scott Hadfield, and I'm here today to bring together some thoughts around the conference. You spent 2 days going through a lot of detail, a lot of the accounting and impacts that may prevail from IFRS 17. My goal is to sort of bring that all together and give you some food for thought and help you be in a better place come Monday morning to start your projects and move forward in that regard. I'm at PwC. I have the privilege of leading our IFRS 17 team there, through the accountants, the actuaries, through also to our IT and our REM people, and we'll get through some of those impacts. It's not just an accounting impact, it's much bigger than that. And I hope today to spend about 10 or 15 minutes with you. First up, just to give you some context, I thought it would be useful to give my sort of perspectives on where we're at as an industry, both globally, because I think some lessons learned from the globe, but also locally. And then run through to a fabulous panel for you, and for very generous people giving up their time to join us and perhaps give some insights from their perspectives around what they're seeing as the challenges around IFRS 17, and most importantly, with the context of stakeholder engagement management, and really thinking about how we deliver on what is quite a complicated project. If you're not here for IFRS 17, I'd leave right now. Otherwise, you've got me for about an hour, and then we'll get you to drink shortly thereafter. All right. So I thought we'd cover it with broadly just to say, how are people approaching it? So what's a practical way of just working through end-to-end, big picture, what it looks like? And I know this will tick a lot of boxes, but I think that's always useful to see what it really looks like as a whole. And then I thought I'd tell you what's happening globally, because we are not the most advanced nation at the moment on IFRS 17. We started in a great place with our own accounting models that changed in the 90s, that put us in a really, really good place. But actually others have now gone ahead with the detail of IFRS 17, and therefore we have some lessons that we can learn from them. It is a whole of business issue, and so if you think you can solve it with a lot of theory around accounting, we've missed the point here. It's much, much bigger than that. And yes, if you're listed, it's different. And if you're life, general, or health, yes, it's different. And obviously with APRA and ATO, it will be different. But combinations thereof mean that there is a whole of business issue that we need to deal with here. And then there's some feedback that we've had from other projects, some tips and tricks around what's been the hindsight test. What do I wish I knew now that I wish I knew at the start of the project? So perhaps share some of those and then run into the panel discussion. With any good panel discussion, it's always good with the audience participation thing. So I know you've been using tools and technology. I'm very happy to be more casual and put your hand up and ask questions with the panel. They're here to help. And really, I know that they're all very keen to just help you move forward with your project. So you'll get out of it what you put into it. And I certainly have some questions in my back pocket. But actually, what's most important are the things on your mind and what we can do to help you with your projects. So please reach out, and like I say, let's wrap it up and bring the conference to a close and get you on with your busy weekends and see your families and friends. All right. So what's the big picture? With IFRS 17, you really have 3 choices. There's lots of choices in terms of how you go about it, but there's 3 main choices. Are you going to comply? All right, they're the rules. I'm going to be compliant. I'm done. I'm out of here. And think of that. Low impact, lower cost, and actually how do I just get it done? The bit that I think I'm a very, very passionate favourite of mine is actually the compliance plus. If you're going to start a project and consume resources and spend money, why wouldn't you spend that fraction more, that small delta, which might be 10% more, it might be 50% more, but the small delta that actually will bring back a lot more benefits than that incremental spend, and I call that compliance plus. So as you think about your systems and your processes, why wouldn't you automate that process that you've been doing manually forever? Because now you've got a mandate for change. And if you're going to rip it up and start again in certain aspects, well, let's do that in a really meaningful, valuable way. And to be honest, boards and senior management and CFOs are listening because they know they've got to write a check asking for a little bit more. There's a mandate for change there that we as accountants should leverage from. And then there's the final bucket, which is strategic. And we are seeing a number of organizations go, we have underinvested in insurance systems for possibly 200 years. definitely for the last 20 years. But quite frankly, it's the one thing in the insurance that has just been very, very hard. If you're a life player, you've got business for 50 years. If you're a GI player, well, it's hard to spend money on that when there's the insurance cycle, meaning that we're not losing money, we are having some challenges with our profitability and volatility. But now we have a mandate to change, and that gives us a real chance to do something different, to think about how we invest differently, spend a lot more money, but know that the payback might be a bit longer, but no, this is our mandate for change. And I'll come back to what companies are doing on that front, but it's fair to say a number are actually moving forward with that mindset. This is the IFRS 17 in a box. You just do these 8 steps and you're done. So by next Tuesday, I want the report cards back, and we're over. And don't tell your auditors or consultants that. But if you break it down, it really comes down to some. I'm going to sit down here. I'm a bit of a walker, by the way. It's Friday afternoon. Keep everyone's head moving. Keep everyone awake. Break it down. There are some key milestones that really break down what we're trying to achieve. And if we focus on those, it really means we can knock them off and make it much more tangible than saying we'll start today and we'll end with a fully compliant set of accounts with all the right systems and processes behind. Again, I show this not to tell you how to do a project. Sue's going to join me on the panel later. She'll tell me much better than I can tell anybody about a project and how to run it. But it is just those milestones that give some colour to it. Start with an impact assessment. Know what the problem is. Don't solve every problem, because if you do that, you'll spend the next 2 years trying to solve them. But know the context of the problem, and then from there, build the project out through these milestones. To give you sort of a feel for where people are at, if you picture that shape of it, and it starts on the left, ends on the right, takes about, if you're doing an IT change in there, 2.5 years. If there's less IT change, obviously that can be a bit shorter. But if I show you the next slide, it's the same shape, right? So just picture the shape. What we've done here is take 20 of our clients globally, but in a generic sense, i.e. when there's a few clients that are similar, it's an aggregation of clients. So it's meant to be a typical list of clients globally of where they're at. And then spread them on this graph as to where they're at on their IFRS 17 journey. This is it. There's 20 clients there. And importantly for me, there's still 4. 4 divided by 20. Bunch of accountants, 20%. Is that okay? 20% are in the starting blocks, just thinking about getting out the box. And that's actually, if you're a life insurance player, you've probably failed at the first hurdle, because that box should have been running a bit quicker, a bit earlier. And if you're GI and health, well, maybe there's an okay chance for you to catch up quickly and be a very, very fast follower. And then actually, more importantly, there's 5 companies here who are at the pointy end of their IFRS 17 project. They have built various systems, processes, tools, have formed a view, a hypothesis of what they are doing to interpret the rules. It might change, it might flex, but they've formed a view, and they are running parallel runs and delivering the IFRS 17 results in disclosures that would qualify with the disclosures there. Now, if they did that now or the next few months and said, we're done, get it audited and we're doing no more work for another year or 2, I don't think that will pass, the quality test or the audit test. But my goodness, it's pretty close, and they're really close to the end. And the final takeaway from this slide is the finance transformation piece. About 1/3 of clients are using this as a finance transformation. Now, the muddy grey bit is between finance transformation and compliance plus. So let's not audit the numbers, but it means that actually 1/3, 1/4 of you are thinking about what we can do now to do things differently and actually make things a bit better. So I won't ask, but just perhaps reflect, where am I on that curve? Where should I be? Where could I be? And when I go back on Monday, where am I and what's my plan to perhaps move a little bit further to the right? So, very busy, 2 very busy slides. So treat this as a sort of not a gift. That's unfair. It's not that much of a gift. But just give you some context that you can take away and reread next week. It's like an impact study, but where it affects your business. So just a mud map around what you need to think through to deal with IFRS 17. Down the left, the key areas. But don't forget, systems are there, accounting's there, but investor relations is also there. We've got data in there, we've got people in there, stakeholder management, and people and change. There's a lot of change going on in the insurance industry in Australia, and change fatigue is definitely a factor in all of my clients and all of PwC's clients. In fact, all of the clients here in Australia. And this is one more layer of change that's happening. So we've got to manage that change process in a meaningful, insightful, and actually enjoyable / fun way, because there is a lot of change. And then obviously the components that sit underneath that. I put on here just a snapshot. Again, I won't go through all the points. If there were 6 key areas for you to think about on IFRS 17, what are the impacts and what are we seeing on that? On here, there's 4 or 5 dot points on each area for you to sort of think through in your own time around these are the sort of challenges and problems and things we're seeing. It may help sharpen your thinking around that, right? If I give you an example, data, have you got all the data you need? Do you know if you've got all the data you need? Do you know where your gaps are? And have you got a plan to fill those gaps? How long will it take to fill those gaps? And then from there, you've got a platform to then start your journey on IFRS 17 accounting. And that's the idea of this slide, just to give you some snippets there. We can come back to this slide in questions if people have some real interest in any particular part. But again, today was really about you, but take that away as some insight, things for you to think about. And as you go through your plans, maybe there's some things there that will help you make sure your plans are complete or give you some food for thought. And then just to really bring it to a head, we're seeing a lot of good stuff. But if I gave you the bookends, some IFRS 17 projects have got circa a couple of hundred people working on them. And I've got budgets of circa a couple of €100 million. I'll say that again, a couple of hundred people working full time and a budget of a couple of €100 million. Now, do I think any Australian company will go anywhere near that? No. Why? Because we've got 1023, 1038, we've got MOS, we've got actuaries that know how to calculate risk margins, we've got discounting and time value of money that's embedded in our DNA. So we start in a really good place. So our budgets will be smaller. Our systems and processes we have today can be pivoted a bit. But the challenges faced with the Central Europeans and Asia particularly are enormous. And with that comes, a scarcity of resource and a demand on people. And then actually a project that's actually going to be quite hard to deliver because they've got clunkier systems, they're not used to the concepts, and they've got to still achieve the same end goal as us. I think Australia started ahead when this journey really got going, probably 2 years ago, and the rest of the world were way, way, way behind. And sadly, I think we've moved up at a sort of, a 10-degree incline at a decent pace. Probably not as fast as I would like, but a decent pace. But oh my goodness, in the last year or so, the acceleration out of Europe and Asia has just been incredible. And to the extent now I feel on average, and average is never a good thing to anchor on, but it's a good litmus test, we're actually a bit behind. And yes, I can always point to a client or two that's ahead, but as a whole, and we've got over a couple of hundred licensed insurers in Australia. As a whole, I'd say we're behind. And everybody's got to comply. So there's a bit of a, call to arms there. There's a bit of a, we've got to get on with this. But we do start in a good place, but we have gone a bit behind. And therefore, the acceleration is something that we actually do need to do. And you've heard about potential delays and so forth. You can't bet on those. You have to plan for today and think about what a delay may mean to your project. But you've got to certainly think about what you're going to do and be in a position to deliver. The 3 things that I would say would be most important from the projects I've worked on and the projects I've been speaking to my colleagues who are working on across the globe, boil down to simple things. You can get a list of 100, right, of all the things you need to do. But there's 3 tips of the day. It's number 1. Think right to left. Go to the end state of what you're trying to achieve. And if you're QBE or AMP on that side, they are different types of goals. They're both listed, but one's a live player, one's a GI player. So your end state is slightly different. And if you're a foreign branch where you're only doing APRA forms, your end state's slightly different. But start there and then work back as to what IFRS 17 means for you, and get clarity on the end goal, and work out your milestones to fill in the blanks. 2, it's a project. And most projects, I use the word fail. They fail to deliver what they were designed to do, they fail to deliver on budget, and they fail to deliver on time. Now, you can define what failure is, and 10% slippage may not be a failure, but it's not what was intended. So set up the governance structure right, hold yourselves accountable, and build an empowerment piece that says people can make decisions and move quickly. The PwC methodology, this is not a spruiking. We're only using agile techniques on this because we don't know all the answers for the end state. We know we want to get to, but it is sprint, take stock, make your no-regret decisions, i.e. do those, work out the dependencies, maybe slow some down, speed some up, but keep moving forward in that sense to keep that project moving forward at a pace with the right level of accountability and the right level of governance. And then thirdly, think really what good looks like. Good's hard to define sometimes, but the key for me in this is actually just being pragmatic. Your actuarial colleagues, there's probably a few actuaries in the room actually, so you'll be careful how you talk about our fellows. We'll calculate risk margin. You can build bells and whistles. You can build the best risk margin, risk adjustment calculation engine in the world, but that's not dependent on other things. So you can do that in a different time frame to actually thinking through your data points and your chart of accounts and what you need. So therefore, think about what you invest in those sort of things and when, but be pragmatic around what you need to achieve in the short term on the more tangible things. You will have to make compromises because you won't solve everything. And therefore, think about which ones are palatable, which ones are risk accepted, and which ones are good enough. And again, that may change whether you're listed down to a small branch. All right. Well, that's probably enough of me speaking. I'll just put, were there any questions on any of those just to start with?
Can I ask a question? Because you mentioned that Australia somehow lost the momentum, yeah?
Yeah.
Sort of a bit behind. So, because IASB is actually considering the deferral of the IFRS 17. So, based on your experience, do you think that actually there would be appetite for if they allow early adoption from 2022 and the standard gets pushed, the effective date actually gets pushed to 23?
Yep.
Do you think that there would be appetite for
Yep.
early adoption?
Yep, good question. So I'll take that question and then we'll get our panel up because I'm sure Anne might have a view on that as well. So early adoption is always available for any standard that is published and finalised. It's always available. The challenge, of course, is before people have landed on what it is and the interpretations, sometimes early adoption means you make some calls that may need to change in the future. So, yes, there could be fulsome delays on the standard and rewrites. That is one possibility. The more reality is that they're going to land on a standard that may have a different start date, but the standard will be issued. And the AASB, my view, will probably move very quickly to adopt that IFRS standard pretty quickly without any adjustments, and there'll be a standard in the marketplace. So if you are some central European companies that are general insurance companies, they're so well advanced, they're saying any delay will just cost us money. Please don't delay it. And there are other companies that are not as well advanced and are looking at IT changes that say, no, delay's good, we need to de-risk our projects. And the empathy is low because it's been around for a while.
Scott, we've had a couple of questions through Slido.
Well, I'll tell you what, Carly, let's get the panel up. Just in case I can't answer it, I can look at my colleagues to help me answer it. That's all right. So if I can, very privileged to have 4 great people for you today. Anne Driver, well, they're in order, but Anne Driver, if you're going to come up. I had some really good notes as well, but I'll ignore those mainly, but I have to look up your title, Group Head of Finance Policy and Assurance at QBE. There we go, round of applause. Anne's been around in the general insurance industry for, a couple of years. She started work when she was about 3 years old, I think, in the industry. But no, is at QBE, and obviously brings a lot of insight to this panel. And obviously very glad that she's here. She's also on the TRG, international TRG, and is a representative for Australia. So not only leads the charge here in Australia, but also has a very important role, and for what it's worth, and has done a great role in advocating for some change at the global scale that without your passion and drive would not have happened. So there's a personal thank you for all the work you've done. I'm very honoured to have you on the panel today. All right. Sue is going to join us. Sue Dickinson is at AMP and is a project manager of Fehraz at AMP, and brings a diverse background of large-scale projects in the finance and transformation area, and is currently leading the project management of Fehraz 17 at AMP with a focus on finance and actuarial. So some really good insight on those things about how we actually get it done, the stuff I'm not quite as good at, and need people like Sue to keep me honest. Very good. Fehraz is here. He joins us from icare. And just so I get the titles right, yours is the hardest one of the lot. GM Treasury and Financial Management at icare. A history not just at icare through a lot of organisations and things, brings a lot of transformational change, particularly in the finance area, and currently leads the Fehraz 17 project at icare, so also brings a government lens to the debate. So Fehraz, welcome. And last but no means least, Ian Hammond. I'll step out the way. Ian has 35 years of experience at PwC. Ian did start work when he was 5 years old, and has since left PwC and is now a non-executive director at Suncorp and Perpetual, as well as a number of other charities. And Ian also was on the board of the WSB and ISB. Not involved in writing Fehraz 17, I might add, but was involved in other iterations of other standards, so brings a really good lens there as well to add to the debate. All right. There's a chair for me at the end. I might stand because we might do a bit of a roam, might get some questions from the floor. But let's start with a Dorothy Dixer, and then we're going to come to you guys. So get those questions ready. Fehraz 17, I guess it'd be good to get the context of what it means for you in terms of the role you're playing. But what's the one thing that surprised you most about it? Perhaps start with the ladies, Anne.
Okay, can you hear me? So my role in Fehraz 17 at QBE is as the sort of business lead on our project, and I'm lucky to have my own Sue, Naomi Wright, who's my delivery lead. So she keeps me honest, and between us we kind of cover all the ground between all the system changes you have to make and the governance that you have to put in place, as well as the stakeholder management. So and those two things go hand in hand, I think, all the way through the project. In terms of the big surprises, can you have a good and a bad surprise?
Absolutely, you're allowed to then.
Okay, everyone's allowed to. Okay, the good surprise, I'm not the only Fehraz 17 tragic. I found my folk. A lot of them are sitting around here. It's really surprised me how we've managed to get some amazingly capable people to put their hand up and come and join our global project, and from within the ranks of QBE, which means that, you know, they're looking at the future, they're seeing that this is what it's all about, and they're willing to join in and get their hands dirty to deliver it. So that's been a brilliant and positive surprise. The not so good surprise is the difficulty with which we've managed to focus the minds of probably some of the senior folk in the organisation and deliver the funding that we need. I'm like, it's compliance. Like, surely this just goes through. But amazing, and I think we're going to talk a little bit later about funding and stakeholder management. Just ask me. I mean, it has been the downside. The bad surprise is how long and difficult that road has been.
Thank you. Why not go in order? Perfect.
Fortunately, we haven't had that issue, so maybe that'll be my good surprise, is that we set the scene earlier on. As I said, we did the impact assessment. EY assisted with that. They laid the expectation at that point that this is a big piece of work, and they put a number in the head of the executives. And you know, when you put a number, that number sticks. So beware.
Yep.
And I always said, don't go under, go up, because you can't go, you've got to go down. So they put that number in their heads. So we have re-looked at the budget to see where we can cut costs, and we have come down. Then if we expand the scope a little, like we were talking about, needing to make sure we can deliver some benefits, then the scope will increase, the budget will go up a bit, but then you can explain why. So fortunately at AMP, we have not had an issue. In fact, I've never had an issue at AMP with regulatory budgets. The thing that probably has taken me by surprise with this IFRS 17 program compared to other large programs or regulatory programs is just how many moving parts there are. Notwithstanding AMP is going through the degree of change that I've mentioned, it's just the number of different things we have to spin up all the time. So it'll be a new iteration of the standard, or something that comes out from APRA, or it'll be something that our new owners want to see, or our executives want to see, and it's just another version of that PowerPoint slide saying something slightly different, and just repurpose that to do that. And yeah, so the number of times we've had to just respond to something that's come our way has taken me by surprise. And it's actually quite disruptive because you're trying to deliver and you're trying to move forward. I mean, we are moving forward, but from a project management perspective, it's quite disruptive. Yeah. So that's what I've found, and my peers, my colleagues would agree with me on that.
Very good, thank you.
Not sure if I have a good surprise and a bad surprise, but from an icare perspective, IFRS 17, given that we're public sector, doesn't really apply to the public sector, as Chris Peach pointed out yesterday. So we're looking at a standard that's not really applicable to us, yet a lot of the work we've done over the last 2 years has been about stakeholder engagement, engaging with the AASB to try and shape what IFRS 17 would look like when it is applicable to the public sector, to make sure that when you look at it from a public sector perspective, it's not just about icare, but we are looking at the public good and looking at as to how we can set it up in such a way that it actually benefits the economy and the public. So having said that, even though it's not applicable to us, we've gone through the process of doing that initial assessment. We've taken our C-suite through it. We're working with our board on it. We're talking to all our stakeholders, including Treasury and our other counterparts across the states, because it is a huge standard and we see it impacting us in a big way.
Yep.
Yeah, personal reflection, I guess the biggest surprise is just how long the standard has taken. In the 90s, I was on the AASB. For most of the 90s, I represented Australia on the IASB, which was a committee in those days. And somebody said to me, well, why don't you get involved in... I was doing financial instruments at the IASB. Why don't you get involved in insurance? And the project was kicking off, and I thought, oh, you know, there's a few problems here. The Americans would say, unless it's invented in the US, we're not going for it. You know, the European insurance companies didn't have enough capital, and so they would be opposing it. And I had a young family, and I thought that I'm spending enough time overseas as it was. So 20 years later, I have 3 grandchildren, and we are finally implementing a project. So it's just the shock of, wow, why has it taken so long? I'm a true believer. I believe that if we can get globally harmonised standards and we can get greater transparency, it improves the capital markets, and ultimately it will be a benefit to Australia to have such a standard. So 20 years.
20 years. I know my role at PwC is on the global committee, dealing with all the kind of issues in every country across the globe, and we get them in and get to sign off on every single one that gets that level. I had the same conversation with a certain partner, and I just made partner, and he had 10 years to go. He handed it to me and said, Scott, I think this will be good for you. You like the technical and you'll have fun. And I said to this partner, but you've got 10 years to go. And he said, Scott, don't worry, it won't be out in my lifetime. And he retires very soon, so he's right, and I've got a job, so I'm grateful. All right, so you've had 2 days. It's been full on, I know, and you've had a lot put at you. But Anne, perhaps to point to you, of all the things that are on the technical side, what are the 1 or 2 that you think are the latent big ones that are going to surprise people as they start to do the work? What are the things that are probably the bigger issues that people can take away?
Well, let's see if it matches up what you all think from the last 2 days. Look, I think you've got to split it up. I think there's kind of the judgmental accounting technical issues that will stay with us through and beyond the transition into IFRS 17 or ASB 17. And that's around the measurement of onerous contracts if you're in the simplified approach. That's a highly judgmental area. You know, you need to design something that's not facts and circumstances, but it's got to be auditable. So you've got to be able to demonstrate why you come up with the figures you have, and, you know, expect a lot of attention on it. So I think that is a really, you know, we can calculate it, but you've got to be able to explain it. And that's a really interesting one, I think, on the, if you're applying the simplified model, so for many general insurers. You know, the other kind of judgmental areas are around your CSM and your pattern of profit recognition. You know, very judgmental, and that will continue long beyond the transition point. The sort of nasties, and I think these are more around transition and we'll kind of then get used to them, is the reinsurance. So I think you had a reinsurance session today. You know, we took our global head of reinsurance accounting through IFRS 17's requirements around reinsurance, in particular around the commissions area. And it was like, yeah, I've got it. I know what you're going to say, you know, I'm on top of this. Yeah. So give us 40 minutes and then we'll ask you the same question. And so we did the 40 minutes that you probably heard some of today. And it was like, okay, I get that this is much, much harder than I thought it was going to be. And Ian just spoke about the 20 years that we've taken throughout standard. This only really came about and was clear to people, I think, at the TRG towards the end of last year, Scott. And I mean, apologies to everyone in the insurance industry. On behalf of the ASB TRG, we couldn't figure out a way to get rid of it, could we? Right. We tried. And the problem is the way that the ISB look at the cash flow model. It's very difficult to justify a different way of accounting for these things. But, you know, after 20 years, we are past the standard being issued. We're looking at changes and we find out about these new things. And that's really, you know, I think that there's still a sleeper there. I think there's a lot of people who don't really understand how messy that is. Although after Rachel and I think it was Leanne session today, hopefully you all kind of know it's a little bit harder than you thought. I think there's probably a third area, which is not the accounting technical, it's not the judgmental, but it's probably the hidden bit, the bit that we're not accounting for that worries me the most. As a general insurer, and I know there's many of you here, you know, we enter into a contract and we are concerned about the exposure, so gross written premium, the unearned premium, and what that means for us, and our analysts are also interested in that. Whereas the ISB have shoehorned us into, well, you're a contract, and they have really ignored this exposure component. And I think that if you forget that, it's to your peril because you'll still get questions on it, so you need to have that information. The big difference between us and every other contract is I could have a full loss on day one. You know, if you're delivering a service, it's usually over some degree of time, whereas with insurance, it could be a big loss tomorrow. So there's a piece missing, I think, in the accounting that we're having to do, which is the exposure part. So that's the hidden one. At your peril, lose your unearned premium and your GWP, I would say. Yeah,
and certainly when I think about the analysts, when they look forward at their cash flow models, they'll be interested in what business you're writing and what next year looks like, less on what you earned this year. So that sort of gross written premium KPI, I can see being a number they'll be interested in, whether that's in the accounts or through other means. I can see that.
And I haven't heard of any general insurers giving it up, but I think it's an interesting angle for life insurers and health insurers as they move in, and that focus might kind of come into their zone.
If I had to wrap that, if there's one key message on all the accounting things you've heard, the devil is in the detail. And I think I've said that consistently for about 10 years now. But every time you open it up and you look at your company and your situation and try and do something with that, I think you'll find there'll be some devil in the detail. There'll be some data gaps missing. There'll be a system that doesn't quite work that way and needs to work this way. Or there'll be other factors that come into play that will mean that as you're trying to do that, you'll find it harder than you think it is from the outside in. And that reinsurance story just sums it up. It looks okay. You feel okay until you look under the bonnet. All right. So that's the accounting. So I'd love to get the project. So just it'd be good to get a feel for what AMP project looks like and how you're sort of setting yourselves up.
So I've covered quite a bit of that in the session earlier. So I think what I probably didn't bring out enough is this point around interdependencies. So what Anne has called out is the complexity around interpreting the standards, the technical accounting, understanding how it applies to the business. Now, the business SMEs, being yourselves, are still trying to get your heads around understanding that and what it means. We on the project side are asked to deliver, and you have to deliver to a time frame, and you work right from left, as Scott said. You have to get it done by a certain time. So we have to come up with a project plan, which has got all the work streams and the deliverables and the critical path. So these are the things that have to land when here, because they're all interdependent. It's quite difficult to do that when you're still getting your head and grappling around some of the methodology and some of the impacts. So that's why I was talking before about needing to be flexible and agile, and you have to get your steerco and your execs and your sponsors to understand that as well, because you're still feeling your way in terms of how that plan will deliver. And if there's a hard date that you have to meet, it's understanding, well, how do you manage the interdependencies along the way? So what we have done is try to look at various options of when we would drop and when we would sort of be in a position to commence the parallel runs and try and build in contingency at the end. So what that could mean is that you run out of contingency, but we have tried to look at various options to say, well, you know, if we run late, we'll try and have a bit of time at the end. Or what is the minimum period that you would need to do the parallel runs? We'd like to have 6 months at least to do the parallel runs. So it's just setting everything in place, looking right from left, but ensuring that we've got the right working groups to work through these complexities so we understand what the impact is to the business, and then that needs to get relayed to the business analysts, the data analysts, and the people delivering the data and the use cases in the sub-ledger, and of course the project management team.
Sounds like a big team. How many people are touched by IFRS 17 at AMP?
There are a lot of people who are going to be touched by it. There's an enormous amount because it's the whole of, you know, the operational accounting and actuarial. The project at the moment is probably more like sort of 25 or 30 full-time, and then more, probably double that with part-time people who are helping or advising along the way.
Yep.
It's grown. It started with about 8.
Yep. Yeah. Again, it's not saying that will fit every organisation. That's a live company with a lot of history, and that would be the hardest exam question for IFRS 17. So congratulations, Sue. You're in the place to be, but that is the hardest. But that gives you context for some of the devil in the detail that exists. That is the hardest exam question, but actually even the easy ones still need a bit of focus and a bit of drive. All right, I'm conscious we've been doing a bit. Perhaps a pause there. Are there any interim questions from the floor?
20 years in the making, and I was there, and I remember a lot of the discussions as to whether they should, because they were going to recognise a loss on day one of a contract, would they actually recognise a profit? But I'm probably unlike you. I thought this isn't going to happen quickly, so I stepped back out of it. After the 20 years, after the investment made and the cost to the industry of introducing a new accounting standard, what do you think the single most valuable benefit is to the industry, to society, for what we're introducing?
I'm happy to
Great
have
question.
a go at that.
Ian?
Yeah, look, you know, we do live in a global market. The analysts, the shareholders that we talk to at a board level, and our CEO and CFO are from all around the world. We do roadshows all around the world. If you turn up with a set of financial statements that nobody else understands, you're at a disadvantage. You know, the benefit of this is a harmonised set of financial statements that hopefully an analyst in Europe and even to the extent that the rest of the world does it, an analyst in New York will actually understand, and I think that will ultimately improve the quality of the capital markets and improve Australia's position. It will certainly improve reinsurance companies' understanding of our position. So it's painful and there's work to be done, but you know, hopefully in the long term we'll get there.
Anyone else like to comment?
Yeah, no, I think, I mean, there are a it's different for us. So we start with 1023 and we start with 1038 and we're moving to 17. So it seems a lot of fuss and noise and cost for actually relatively little change, certainly in the GI market. Mm-hmm. But, there are many countries that are taking on IFRS that don't have an insurance standard at all. So for them, this is what they've been waiting for 20 years, it is, most of them. So, that is another real benefit. And we just don't see it as much here. And that sort of, and particularly in the life market, I mean, in the different markets across the globe, it's massively different, the accounting. They're using different measures to talk to the market versus their accounting. That's where the big benefits will come in. We're along for the ride.
Yeah, I think that's fair. If you wear your true global hat, the benefits are a lot clearer. Sitting in Australia, empathy with you, I feel you're paying 1023 if you're a GI insurer is a pretty good standard. We looked at cash flows, we looked at when they arrived, i.e. discounted, and we looked at the uncertainty that existed, risk margins. That's the fabric of where we're going for the IFRS 17, but many companies don't have that. And on the life side, it is a patchwork quilt that is not very consistent. So if you wear your global hat, it's very easy to see. If you wear your Australian hat, I think along for the ride is probably the fair comment. But good question, thank you. Hey, Kylie.
Hi, Scott. I've got a couple of questions that have come through. For companies which are behind, what is the view of the panel in terms of the holdback or the blockage to getting started?
Do you hear that? Yep.
Yeah, well, I think it's different. It's going to be different in every company. I mean, I think there's a story about, I think your first slide about what are we doing here. But if you're starting now, there's almost an assumption you'll be doing compliance.
Yeah.
Because you haven't left yourself an awfully long runway.
Yeah.
So your story now so far should be, we need to do this, we have to do that. I would say if people are struggling to get started, it's because they haven't been listening to what's been happening. So we've recently had APRA, and I think we had a session on APRA yesterday. They've now come out with their consultation paper. So if people weren't focused before, there's something that's going to kind of maybe trigger that urgency to get started. So, if you're not started, somebody should be starting it. And why not? It could be any one of you. Go back and ask the question in your organisation, let's get started, what do we have to do? But, there's many things. I think probably the thing that's probably held most people back is the standard not being finalised. And then there's there might be another delay. So there's all these things contribute to it. So I think the change is coming about now because APRA have certainly started to show their cards, even if not all of them.
Just Scott, to add to that, from a director perspective, you sit there and Suncorp talks about prioritisation risks. So if you look at what's going on in the industry, we have remediation programs, we have new regulatory requirements across the board, everything from the new insurance codes to all sorts of projects. We have legacy systems that always need updating and work done on. We have digitisation programs, and then you've got IFRS 17 and a whole lot of other things as well. So, this is just not negotiable at the end of the day. It needs to. We need to get in there. We need to do it. So, getting in front of the board or at least the audit committee and making that point very clearly, because there's not going to be room to move. We may get delayed, but you're going to have to do it. So it has to be on the agenda, and boards just can't sit there and say, yes, but we're going over the budget spend on projects this year or something. We've just got to do it. We've got to increase the budget, so that message has to get through.
Yep. Thank you, Ian. Fehraz?
One thing observation from my end is that once you do that initial assessment and you start looking at IFRS 17 with your own numbers and your own products, it just makes it a lot easier to get going, because up until then it's just a concept and a bunch of slides. Yeah.
So therefore the impact study is the most important thing, because that helps you see more clearly. I think my take on that would be, you are where you are. You cannot change the past. That's done. But what you can do is choose a different path from today and go forward. And my simple message to you, if you are in that position, get started, make some noise. And certainly I know that the session I ran recently for the NED directors was broadly, here's some good questions for you to ask your management teams, because you need to hold them accountable on the basis that we as an industry, as a country, need to solve this problem. And we're all better off if we solve it together and get going. Now, if you're smaller, I 100% agree you should be a fast follower. So don't spend months trying to solve the complex accounting. Just get going, work out your no regrets, and just knock some things off, but get started. There was a second question.
Okay, so this question is for you, Scott. As an auditor, do you anticipate that most companies will achieve compliance on time, or do you anticipate qualifying a lot of sets of accounts?
What do I think will happen? I think we'll get there. I'm English. I came here 20 years ago for a 2-year secondment. Sort of liked the place, so stayed. But one thing I liked about this place is the Aussies do have a go type attitude, and we'll just get on and do it, right? So I do think there's a challenge ahead. But I do love the Aussie way of, well, that's all right. We'll just get together and we'll go after it, right? And we'll have a go. And I think the Aussies will get there. Will they need a lot of help from each other? Yes. Will the industry groups need to collaborate and compare notes on accounting for CTP, for example, or icare? Do you need to consult with your Queensland and Tasmanian colleagues? Absolutely, because you're going to have similar problems to solve. There is no competitive advantage. So that collaboration, I think, will happen. And then, I'll say this, but the consultants, they're doing this, right? So they've got some good insight to give. And we have 2 teams. We have an audit team and we have a consulting team. And both will be very, very busy. I think the biggest challenge for the market is actually scarcity of resource, because as we leave it, the tsunami that comes at the end and the history that happened with Solvency II in Europe, there weren't enough actuaries to help get over the line for the companies that wanted to achieve Solvency II compliance, and that was only Europe. And the rest of the world sucked in resources to help with that issue. This is a global issue with the same deadline. So in terms of scarcity of resource, I think there will be a scarcity of resource, and insurance accountants and actuaries are going to be hard to find in time to come. So if you have good ones, keep them. And if you've got a job now, don't worry, job security is fine for a few more years. So and you can have that in writing from me. But we've got some hard work to do to achieve that compliance. Great questions, whoever that was. Thank you. All right. Just thinking about stakeholder management, because that was the title of the speech, so we should go back to that. Managing the bosses, and you've sort of alluded to it. We want some money. How do we ask for it, and how do we get it? How are we managing those stakeholders? What tips would you give?
You need to ask me after next week. Look, I think the key thing is not just the ones that you're going to get the money from. I think it's managing and understanding who all your stakeholders are. So internally, I mean, we're a global group. We've got a lot of internal stakeholders that we have to get over the line at all levels of management. So, you've got to convince all your senior finance leadership that this has to be delivered. But you also have to work with your, we've got investor relations. Yeah. Ultimately, your HR will be involved. If your profit's changing, they're going to have to relook at incentive schemes, etc. So there's quite a wide range of stakeholders internally to manage. In terms of managing those and managing for funding specifically, which you asked about, patience is the biggest virtue you can take into that, and a positive attitude.
Yeah.
And also just, remember that, I come from a, policy technical background. I've worked on the various TRGs, nutting through some of the technical issues. That's not going to wash when I go in there, but kind of it can help you. So you've got to get it clear enough and simple enough that people understand what the project's about. But by the same token, it's worth reminding people about the reason why there's quite a lot of delivery risk around this, because we're still subject to interpretation.
Yes. Yeah.
So you can actually kind of buy yourself a bit of a space there by saying, here's my project, here's what I'm going to do, but here are kind of my contingency risks that I've got to deal with around it, which is a bit like Sue was alluding to earlier. With the external stakeholders, that's getting quite interesting. I think we'll start to see, as I said, APRA, but also the rating agencies. That's just for QBE, that's a fairly big thing, and I think we've already seen 1 or 2 start to say, can we talk to you about 17? And that also brings in another group of stakeholders that, you've got Treasury, capital management. If you're changing the way you're looking at your investments, you've got your GI team. So it brings in kind of a new group of stakeholders. So I think there's to your point earlier, so there's lots of plates spinning, and you just have to look at each stakeholder group and decide how to manage and work with each one, and it's not the same for each.
Each one.
Yeah.
Yeah, I mean, I agree with Anne. There's just from a board perspective, that's what I'll be looking for is have all the right stakeholders been informed and engaged, both internally, asset liability management, investment strategy, capital, reinsurance people, the regulatory reporting side, obviously, tax. I mean, it was interesting hearing the previous speaker on tax talking about TOFA and what happened to the transitional requirements then. I remember Westpac booked a gain of $1.8 billion. They weren't expecting when TOFA came in because they just found a windfall profit in the TOFA transitional requirements. So, you know, there can be some surprises in those spaces. Certainly, what does it do for new products if you launch new products and then you find, you know, it's an owner's contract on day one because you haven't got the volume, so you're booking losses as soon as you write something. There'll be a huge number of impacts. If you're listed, will the analysts actually understand what you're talking about is the good question. I asked the CFO at Suncorp for a list of the qualifications of the analysts that we talk to. And the buy-side guys, you know, some of them looked like they had accounting and actuarial qualifications, and I had a little more confidence in those, and some of them get awards for knowing what they're talking about on insurance, but, you know, and Perpetual has some of the largest buy-side analysts in Australia. You know, 1 minute they're looking at an insurance company, the next minute they're looking at a bank, next minute they're looking at a mining company, and, you know, it's not, they specialise, but they're not going to understand all this stuff, and they're going to have great difficulties modifying their models and how they look at things unless, you know, IAG and QBE and AMP and Suncorp actually walk them through what the impacts of these new standards are and explain it to them. We know analysts have always hated volatility and they hate surprises, and in the days when I was a standard setter, you go to an analyst and say, what would you like the accounting standard to say? And they'd just say, I don't care what it says as long as I can predict what the number is next year. And that drives certain behaviours as well. So they hate that volatility side. We know we're going to get more volatility out of this new standard. How and when and what it means is going to be a challenge.
Okay.
From our perspective, once we did that initial assessment, we called the CEO and his direct reports in for a meeting to talk about IFRS 17, given that we did a report which had our numbers in it. And it was 2 or 3 o'clock in the afternoon, and the Chief Technology and Transformation Officer looks at me and goes, really, accounting standards, 2 o'clock? But by the end of the session, it was a bit of shock and awe there, but by the end of the session, they understood how important it is. So it is certainly on the roadmap as far as we are concerned, internally.
All right. Suji?
I think I'll just reiterate what we have been saying about how important it is around the stakeholder engagement. And it's not as daunting as it sounds, because it's just a question of understanding and listing out who all of those stakeholders are. So Ian's gone through a list of them. You would know, the project manager, change manager, and the business leads know. And it's just the question of, this is the list, this is who we need to communicate to and decide when and what. So if you've got your steerco, that's monthly, blah, blah. If it's your audit committee, it's quarterly, and these are the sort of the messages. So it's not as daunting as it sounds. It just needs to be comprehensive, and it needs to be well thought out, and it needs to be a jointly owned communication plan, which is pulled together with the help of the project manager, change manager, and input from the business leads. I don't always know who we should be talking to, but the actuary will come to me and say, oh, you know, we haven't thought about tax, we've got to speak to this person in tax. Okay, great, put that on the list. So that's just, you know, don't be daunted by it. It is very doable. And just the other point around stakeholders in terms of the budget and how you manage that, always look for benefits. If there's a large amount of money being invested and you can demonstrate that it's going to deliver some benefits, that's what they always want to hear. At the moment, they are probably soft benefits, but whilst you're going through the assessment that you're doing, always be looking for opportunities where you can reduce interfaces, journal entries, automate, simplify, whatever, and then just be building that case up the whole time. That's what the Steerco and the sponsors are going to want to know.
Perfect, thank you. Just on topic, but slightly different tack. Plenty of people in the room here, lots of different grades. They've all got a boss, and that boss might be a controller, a CFO, a board. Managing upwards. What's one or two tips to help people manage upwards better?
Just look interested when you're talking about IFRS 17.
No.
At the end of the day, I mean, I've been an IFRS 17 tragic in QB, sometimes feeling quite on my own. But, there's a kind of soft start. We've been able to ramp people's interest up, ramp people awareness up. And so, there's kind of quite a broad, 2 years ago, I sat down with the heads of the audit committee and the risk committee across the globe, and they asked for 2 hours of intense IFRS 17 training. That was a really good start because that kind of piqued people's interest back then, and it's that slightly sustained that managing up. But fundamentally, I think you have to look interested in what you're doing. You have to embrace it, and you have to also make it come alive for them. And so one of the key things I would say is, don't talk in tongues, don't talk in accounting language, talk in numbers, talk in impacts. Look at what your result looks like and start to shape up what it will look like in the future. Start to explain how much impact it will have on your profit, even if you don't have the numbers.
Yeah.
That's the bit to manage out from wherever you are. Is look at the numbers, look at what the effects are, and start to talk about those as well.
Oh, good answer. Thank you.
Anne and Sue have answered it, and they've got great experience. I would just look, and I look at any project like this from a board level and say, it's not just how do we turn a compliance project into something that's actually going to add value to this company? And if you can get that message across rather than just a compliance project, you'll get a lot more people's attention.
All good there. So I think I heard in there, in my language, show hunger and passion, because people will warm to you, because it shows that you care. Go for a bit of shock and awe, scare them a bit, make it relevant to them. That's always good to spark the interest. And obviously a bit of know your stuff and make it valuable, right? It's always nice to be relevant, and it's always nice to say, here's what it means, here are the benefits. So just there, some very good tips there. Thank you. All right. Thank you. Yeah, shout, why not?
We talked about the technical application. Does anybody on the panel have any views about target operating models and how this will impact finance teams and actuarial teams and what they might look like in the future?
Look, I think this is one of the benefits that you can get out of this, is that we should be more joined up. And I think, again, it's levels of difference. I think in Australia and in the general insurance space, the target operating model, if it's not, it should be a little bit more joined up across your various areas of finance, like your actuaries, working closely with your financial reporting teams, working closely with your financial planning and analysis. That sort of join up should already be there to a certain degree, and certainly working on globally on the TRG. That's what I've noticed. We're quite well joined up, but I think this is an opportunity to even make it more joined up if we can leverage it, because actually you can't do a project without reaching out to all of these different areas.
Yeah.
So I think the target operating model should look a little bit more, maybe one team rather than multiple teams, and that's what I'd like to see.
I think it's going to be one of our big challenges, but quite daunting a bit, but quite exciting. So AMP, the existing reporting is actuarially owned, and the chief actuary is accountable. We're moving to the CFO being the accountable and owner. So it's going to be quite a big cultural shift, and we're looking for, as I've been saying, automation, simplification, reduction of manual adjustments, etc. So what does that translate into? Reducing costs, improving efficiency. So it is going to have an impact on the team, the structure of the team, and the capability that will be needed going forward is going to shift as well, because it is moving much more to what's going to come out of the subledger and into the reporting reporting hub. But in order to do that, in order to get those benefits that will come from this capability model improving, we have to improve the data and improve the handoffs and the flow, the end-to-end flow. So therein sort of does lie the challenge, and deal with some of the nuances around how we're treating our products at the moment. So watch this space. We might have a chat in 6 months or 9 months and see where we've got to.
From our perspective, I'm not sure if it's by luck or good design, but we had a restructure sometime last year, and the head of the finance teams, the actuarial teams, and the data and analytics teams all report to the CFO, which has made it a lot easier from an IFRS 17 perspective, because you've got everyone under the one head. So that certainly makes it easier from our perspective. However, as we go through the process, I can see that that model is going to be continuously refined, and you've got to overlay that with technology as well. Look at what's out there, whether we go with Subledger or not. People talked about RPA, so we use a robot at the moment to load the actuarial files into the ledger, so we can see how we're going to be able to take that a step further as well as you go.
Yeah, at Suncorp, the finance function owns the financial statements, but I'm pleased to say that one of the people that's been at the board table and the audit committee hammering the table, saying that IFRS 17 is really important, is our actuary, and I think you've got it. That's a key stakeholder who has to own the process as well. Yeah.
Very good. Thank you for the question. Any others? Rock, beer, we're sort of in the middle. All right. Well, I've got one final question. 2 days listening to IFRS 17. The whole team here has absorbed a lot. What should they do on Monday morning when they get back to the office?
You like to first?
You noticed. Yeah, or in the words of the Hitchhiker's Guide to the Galaxy, don't panic. I think, other than your cup of tea, which is always the first thing, I would, it depends whether you're on a project or you're not. If you're on a project, I think those slide you had up with the 3 things. Think about the end state, what you're going to. Get your governance right. I can't remember what the last one is, but it was really good. Anyway, that's kind of how we've done our project, and that works. And I think the end state, no excuses there. You've got loads of pro forma accounts out. You know what your investor packs look like. You know what you have to deliver to your outside stakeholders. Get them and make them, and have a look at what they would look like under IFRS 17. Then you know what you're aiming for. So that's what I'd say. If you're not in a project, put your hand up and get on one. Because if you are, you want to be here in the future, you need to know how this is going. You need to be able to talk to this. So that would be my advice for Monday morning.
Perfect.
I think everyone's at a different stage, but possibly what you might want to do is just take stock, stand back, and just think where you're at. And as I said earlier, you can never plan too much. So depending on where you are, and it doesn't really matter what phase you're at, you can still take stock and stand back and think, okay, just what should we do next to get to the end, and reflect, and then come up with what you're going to do, your action plan.
Perfect.
I think if you haven't started, then certainly get onto that initial assessment phase. Get a Big Four in, get someone in to start helping you out with it, because it's not a huge impost of money to do that, and it certainly helps because you start seeing things from your own perspective.
To talk from a NED perspective, I'm the one who has to sign the financial statements at the end of the day. If you haven't got in front of the audit committee or the board, then put that on the agenda. It's what I would do Monday morning, because you need to get engaged at the highest level and make sure that'll bring a lot of other stakeholders to the table. So plan for that.
There we go. Fantastic. Some very good tips there. Were there any final questions? Oh, there is. There is.
If there is another delay, will you guys keep running with the project, or will you guys just keep the can down the road?
We won't take the foot off the pedal at all. We'll keep going. and we've talked about this as to whether you'd go sort of long and skinny and, push the date out or so. Invariably, it lands up costing more. And once you've got the momentum and you're actually, you've got a good operating rhythm, I find it's best to keep going. If there becomes a stumbling block or a bottleneck with the standards or something that really you can't progress, you deal with it at the time. But we've taken the decision, we will not stop, we will keep going.
Same from our perspective as well. Even though it's not applicable to us just yet, we're actually going to ask if we can have an extension even further, in the public sector, because some of the challenges we've got are slightly different. But having said that, we definitely aren't stopping. We're actually going through it with the board within the next 3 months.
So, a few months ago, we put in our exposure draft response asking for the extra delay. Yeah. But we're very well aware that we're about to enter that stage of no return. Yeah. So we deliberately designed our project earlier up so we could have a very clear division and actually stop, really, and then restart. But we're entering the point of no return. So it's a difficult question. We could all just go to 3-day weeks on the project. We'd like that, wouldn't we? Or just finish at 3 o'clock every day. But, the reality is we'll keep going, but you'll do it so you can design for, both eventualities. And there's always an option to go early. You were hoping I was going to say that. I'd be there in 2020. No, there is an option to keep with the 1/1/22 date. And so, that's on the table. And I think the nearer you get to the end state, the issue you have to face then is, might I be the only one? And if you're not afraid of that, then go for it, if you can.
Be brave. All right. Well, thank you. Thank you, panel. Hopefully you found that useful. It was thought through to help you with your jobs, right? Because you're going to go back to your office on Monday and spend 2 days getting a whole barrage of information. So some of it will stick. Some of it might have to be reread and learned. But bringing it together, I think my experience is, if you walk out of here with just a couple of key messages, the devil is in the detail, for sure. So don't underestimate the project at hand. 2, be brave and get after that. And 3, I hate saying this in insurance, but no one chooses to be in insurance, and I fell into it. But 20 years later, 25 years later, I'm still going. And I love this industry. And we've got to get this right, and we've got to get on with it. So that hunger and passion, there's definitely something there to say, yeah, we can do this. So let's do this. All right, thank you. Thank you very much. Thank you, Ian. Appreciate your support.
Don't go yet. We've got just one last thing to do, sorry. Thank you very much for your time. We've got a small gift for you. You have to go over there. Yeah. Thank you so much. I just want to say a few words just before we close for the day. But I will make it quick because I know you have drinks out there and I have a plane to catch. So I won't recap the last 2 days. I'll just thank some key people. First of all, I'd like to thank all the speakers. There you go. There you go. All the speakers who presented over these 2 days. As you can imagine, they put a lot of work into preparing for this. So, and it's all for our benefit. So, we appreciate their efforts very much, and thank them so much for helping us with this conference. Similarly, I'd like to thank Jeff, Belinda, and Kylie for volunteering to be our MCs for the event. They're not professionals, but they've done a fantastic job, I think. So thank you. I'd like to thank the conference committee, without whose efforts we wouldn't put this conference together. We wouldn't be able to do that. We started planning in March. So can you imagine how long it's taken us to get here? Even in September, we were still trying to put it together, right? So Alex, Kathy, Kiko, Francis, Ali, Luis, Adam, Stephen, Anne, Jerome, William, David. I don't know whether all of you are here or not. Julia, Kylie, Michael, Rachel and Rian, thank you very much for all your time and effort. While the committee may be the ideas people, there are two ladies who actually execute these ideas and turn them into reality. Di, Rosie, thank you very much for everything you've done, from making sure we have a location, to food, the handbooks. The list is endless. Most importantly, I'd like to thank each and every one of you for attending this event and making it such a successful event. We put together these events for you, so it's heartening to see you here supporting us, and in return, we hope this event met your expectations and that we were able to provide you with some new ideas, helped you to learn something new, or at least you made some new friends, new connections that can help you to cope with your IFRS 17 journey. We'd really like your feedback on this event, so we will be sending out a short survey shortly. I hope you do take the time to actually complete the survey, because it does help us with putting together future events. Finally, given the importance of this topic for us in this room, and as you probably noticed, we have recorded the event, and you will be able to access this via the member portal on the FSA website for free. Just make sure your membership is correctly recorded, so that and Diane and Rosie can help you with that. Thank you. Have a lovely night. Have a lovely weekend, and a safe and happy Christmas and holidays. Thank you.